Hello, friends. Today, let's talk about a very money-flavored topic, which is practically a soul clash of 21st century capitalism. On one side, we have Oracle of Omaha, Warren Buffett, a legend in the investment world. His CEO annual salary has been fixed for over 30 years at $100,000. On the other side, there's Silicon Valley Iron Man, Elon Musk, who just received a potential compensation package worth nearly $1 trillion. You heard that right. One is 100,000, the other is 1 trillion. What exactly is going on here? Is Buffett outdated? Or has Musk gone crazy? Is this about elite performance or blatant greed? Today, we're going to thoroughly dissect this trillion-dollar bet. First, let's look at Buffett's side of things. The old man is almost 95 years old and is preparing to retire at the end of 2025. He recently issued his last shareholder letter as CEO, and this letter was practically a bombshell. Although he didn't name names, the timing of this letter's publication, just days after Musk's $1 trillion plan was approved, was a precise sniper attack. What's Buffett's core point? He said he observed a phenomenon. What often troubles very wealthy CEOs is that other CEOs are becoming even wealthier. Then he dropped a golden quote: envy and greed go hand in hand. Buffett's meaning is that when salary reforms were introduced, forcing companies to disclose how much CEOs earned, the original intention was to shame them into taking less. But what was the result? The exact opposite. It was like posting a salary slip in the company's break room. One might have thought the highest paid person would be embarrassed, but instead, the second highest paid person saw it and immediately rushed into the boss's office, yelling, "Why does he get 50 cents more than me?" This not only failed to bring moderation, but instead created envy, leading to a salary race. Buffett also criticized compensation consultants, saying they merely help CEOs cleverly select peer companies for comparison, which, in plain terms, means finding excuses to raise salaries. And what about the old man himself? His $100,000 annual salary is a governance mechanism. His enormous wealth of $160.2 billion comes from his equity, not his salary. He is sending a signal to the entire Berkshire empire. Our goal is to grow the company's intrinsic value like a snowball, not for the CEO to personally enrich himself. So, Buffett's criticism of Musk is not just about moral greed, but also operational. An incentive system built on greed is inherently unstable. Now, let's deconstruct the trillion-dollar bet and how this money is obtained. First, you need some pre-context. Musk's previous compensation plan from 2018, valued at $56 billion, has already been ruled invalid by a Delaware judge. Why? The judge found that the approval process suffered from serious flaws. Several board members lacked independence, which in plain language means they were all Musk's good friends. The court believed that although Musk only held 13% to 20% of the shares, he was effectively a controlling shareholder. Therefore, this transaction was deemed a controller transaction with a conflict of interest. Invalid. Even though Tesla tried to get shareholders to ratify this contract in 2024, the court rejected it again. With this legal original sin as a foundation, let's look at this new plan from November 2025. Its value is a potential total of nearly $1 trillion, with a net value of approximately $878 billion. How was it obtained? It's divided into 12 tranches. The unlocking conditions are that it must simultaneously meet a market capitalization milestone and an operational milestone. The ultimate goal to receive the full $1 trillion is for Tesla's market capitalization to reach $8.5 trillion. This is the pace to become the #1 company in the universe. The operational goals are even more sci-fi. Selling 1 million Optimus robots, 1 million robot taxis in commercial operation, 10 million active FSD subscriptions. So, is this trillion-dollar bet good or bad? Supporters argue that it is a model of elite performance. Musk doesn't take a salary and has no cash bonuses. This is a purely results-driven mechanism. He only profits when shareholders achieve massive returns. Musk himself passionately fired back at critics on X, saying, we need the right to get back. The craziest thing is that those who say Tesla is overvalued also say my compensation plan is too high, even though this plan entirely depends on whether Tesla can become the most valuable company on Earth. Opponents, represented by experts and scholars from Yale University, directly attack the plan, calling it purely bad corporate governance. They consider these goals absurd and wishful thinking. The core argument is that Musk doesn't need additional incentives at all. He already holds nearly 20% of the company's shares. If the market capitalization truly reaches 8.5 trillion, he would gain 1.6 trillion just from his existing shares. So why does he still want this new plan? Critics believe the plan's true purpose is not incentive, but hostage-taking of shareholders. Musk has been threatening to leave if he doesn't get about 25% voting control. Therefore, the $1 trillion figure is more like a narrative weapon, a public relations campaign. The purpose is not to actually pay $1 trillion, but to create a story of infinite growth in the present to support Tesla's high valuation. Friends, the essence of this debate is a fundamental conflict between two physics of value creation. Buffett plays value investing. He buys companies like we buy a school district house. He only buys floor plans or businesses he understands. The house must have a moat around it, meaning a lasting competitive advantage. He must buy when house prices are discounted, which is a margin of safety. His favorite holding period is forever. So he buys boring but stable assets like insurance and Coca-Cola. His $160.2 billion in wealth is the product of compound interest. Like a snowball that rolled for 60 years, it became a snow mountain. Musk plays disruptive innovation. Musk isn't buying houses, he's the one who wants to colonize Mars. He believes that in the long run, the speed of innovation is the only thing that matters. He goes all in on risk. When something is important enough, you do it even if the odds are not in your favor. He only heavily bets on his own ventures. His over $460 billion in wealth is the product of speed. Like a rocket launch, it created trillions in value in a short time. In Buffett's house buying model, Tesla is a terrible investment. Its valuation is built on speculation. The CEO is unpredictable, and there's no clear moat. In Musk's rocket model, Buffett's boring businesses are not worth mentioning at all. Musk prides himself on actually creating things, while Buffett is just allocating capital. They are playing two completely different games. Let's open our minds and imagine what would happen if these two swapped companies. Scenario 1. Musk takes charge of Berkshire. Musk takes over a $1.2 trillion empire, holding a massive $382 billion in cash. But all he sees are boring assets like Geico and Dairy Queen. Musk would find Buffett's margin of safety simply cowardly. So much cash sitting on the books is too inefficient. He would immediately liquidate these stable assets and then invest all $382 billion in a desperate moonshot such as achieving artificial general intelligence through XAI or colonizing Mars. The result would either be 10,000 times the return or complete bankruptcy. Scenario 2, Buffett takes charge of Tesla. Buffett takes over a $1.4 trillion company whose value is almost entirely built on future promises. 1 million robots, 1 million robot taxis. Buffett would find that the company's valuation is completely detached from its tangible assets. The CEO is unpredictable, and the risk is extremely high. He would fire Musk due to his unpredictable behavior and distraction. He would immediately stop all speculative research and development, including Optimus, Robot Taxi, and FSD. He would dedicate 100% of resources to winning the electric vehicle price war and building a true moat. He would use all profits to repurchase shares. As a result, Tesla's narrative value would evaporate overnight, and its stock price would collapse. But it would eventually perhaps transform into a smaller, profitable, but boring traditional car manufacturer. In conclusion, this debate is not about judging who is right or wrong, but about understanding that it is the ultimate showdown between two types of entrepreneurs. Warren Buffett is an unparalleled value creator. He has built a $1 trillion empire by masterfully understanding existing capitalist rules with patience and discipline. Elon Musk is the most representative industry disruptor of the 21st century. He has created trillions of dollars in industries from scratch by breaking existing rules, taking impossible risks, and using innovation speed as his sole criterion. The conflict between Buffett and Musk concerns the soul of 21st century capitalism. And the old man's final warning is actually an elegy for a governance system, including the board of directors and institutional investors. This system was supposed to protect the patient value model he represents, but it has now failed. And Musk's trillion-dollar compensation plan, which Buffett denounced as envy and greed, but which shareholders, including giants like BlackRock and Vanguard Group, praise as elite performance, is the ultimate proof. It shows that, at least for now, the vast majority of market participants prefer the high-risk, all-or-nothing disruptive model represented by Musk rather than the stable, compound growth value model represented by Buffett. This leaves us with a fundamental question. Is the ultimate purpose of capital to multiply or to conquer? What do you think? Feel free to share your thoughts in the comments section. Would you like me to delve deeper into whether Buffett's value investing model is truly outdated in today's AI era?